Hello everyone, welcome to another episode of Flying North. In this episode, I will be discussing about what is credit score, what are the requirements you need in order to maintain a credit score, and what are the ways in which you can improve them. So this tells us who are the people who would usually ask for that credit score. Whenever you go to apply for like a car loan, they will pull out your credit history to see how good your score is. The other is for rent. So whenever there are certain landlords that request you to submit your credit score along with your rental application. Then you will also be the most important factor is when you're looking to buy a house. Your credit score really matters at this point, and your entire loan and also the percent at which you will get your loan largely depends on the kind of credit score. This credit score ranges from 300 to 900, and each range says if you're a good or a bad borrower. Now we look into the factors that actually affect your credit score. There are many factors that can lead to your credit score going really high, above the 740 range, which is what you actually want, or it can even push your credit score below the 500 range, which makes it look a really bad borrower. So if you have unpaid bills, be it credit card bills, telephone bills, your tax property bills, all that unpaid bill affects your credit score. Have you declared bankruptcy? How much of personal debts do you have? How much of mortgage debts do you have? Car loan debts do you have? The more debts you have compared to the income that you are earning, again, that affects your credit score. The other factors are: is there any credit card that has got maxed out? Have you defaulted from any of your payment? Are you a person who pays your bills pretty much on time, much before the due date, or are you somebody who constantly keeps paying the minimum amount against that credit card? You are piling up, does not pay the credit card in full. So let's take for granted that there is a situation where you know that you're going to apply for a home mortgage loan, which is a very important. Your credit score needs to be really good in order for that. Now let's look into the ways in which you can improve that credit score. One is pay your bills on time. Make sure that you always pay the bills much before the due date. If not, then probably if not within the 10 days past the due date, try to pay your bill. Late payments definitely damage your credit score to a certain extent. Always try to keep the balance on your credit card to the minimum. What I mean by that is, let's take you have a credit card that is of the limit with $3,000. So always make sure that your balance that you keep on that credit card is almost 30% or below. So a limit of 30% on 3,000 is $900. So the balance that you keep should always be below that $900. So if you have an old credit card that you are not using, try to keep it active. If you are able to curb your expenses and not max it out, try to do just one monthly purchase on it. It could be very minor, like just going to Tim Hortons and buying a coffee, or doing your automatic payment of some bill through that credit card. Just one payment in order to keep it active. What that will do is it will show that your credit limits are really high, but the amount of debts you have on your credit cards are much lower. So if you are able to curb your expenses and not keep maxing out your credit cards, then try to keep an old credit card that you're not using. Now, these are points that I spoke for people who have been here for some time and they already have a credit history and they are trying to improve it. What about for newly landed immigrants? Because there is no purchase history that's available for them for the lender to determine which range they fall, or even for students as they are coming here. There are two options for these people. One is try to get a secured card. Many of the banks, they offer a $2,000 secured card against a $2,000 deposit that you'll have to put in that bank. If you have the finances, I strongly advise you to go ahead and get such kind of card. What that will help you is it will help you increase your credit spending capacity, and once you start paying your bills on monthly basis, within a matter of 6 months you can shift that secured card. Within a matter of 6 months your credit history will also get built, and probably after 6 months you can go back to the bank and remove it from the secured option, and you can go for a regular credit card. This will help you accelerate in building your credit history. Now, if you are a person who does not want to go in for a secured card and put a 2000 collateral in the bank, many of the banks offer a credit card limit of $500. Again, I would say go ahead, take the credit card and spend, and make sure you pay your bills in full every month again. So the next question comes to, where can I see my credit score? There are two bureaus in Canada that offer this credit score. One is Equifax and the other one is Transunion. I have provided the link for each of them below in the description. All you need to do is give them a call. They will ask you some personal questions, and once you provide them, they will send you a hard copy report of your credit score to your house. Now, what you can do with that is, probably if you're shopping around for a car loan or your rental agreement, these are the credit score report that you can attach with them and go ahead and process. Many of the banks like CIBC and RBC, they also offer online check-in to your credit score. I know that CIB offers it via their app, where you can just log in and look at your credit score. RBC, you'll have to log into their website, and they will let you know what your credit score for that particular day is. These banks also offer various options where they show you what are the factors that are affecting your score, and at the same time they also show you where you can increase your score. So when you manipulate those various options, you can see how much that paying off a particular debt or maybe closing of a particular account will push your score to what extent. So they give you those variations. So they let you play around with those kind of variations also to show, to let you know how high your score can go in the current situation that you are in. Now, you also want to be very careful that you don't want to constantly keep pulling out your credit score over and over again. So there are two words that you'll always hear regularly. One is hard hit and the other one is soft hits. What soft hit means is, whenever you as an individual is going and requesting your credit score to the bureau like Equifax or TransUnion, or you're checking your scores on your personal banking account, those are called as soft hits. These checkings do not affect your credit score. But if you are going and applying for a mortgage to a bank and the bank has pulled out your credit score, or you're going to a third party lender, or you're going to a car loan agency and they are pulling out, those are called as hard hits. And you do not want many agencies looking into your credit score on the same month. That really affects, because let's say I want to apply for a mortgage and I went to RBC Bank and they pulled out my credit history. I went to CIBC Bank, they pulled out my credit history. I went to let's say a TD Bank and they pulled out my credit history. Now, if fourth person looks into it, what they see is, in a matter of a month, there are almost 3 different kind of lenders who have been looking into this person's credit history, and somehow this person is still shopping around. That raises a red flag, saying that there is something wrong in this person's credit history, due to which these lenders are not lending him any money. That also affects so many people trying to look into your credit score in a given month, also affects your credit history. You want to make sure that you do not have multiple people pulling out your credit score on the same given month. So you may want to spread it out. If you have had one hard hit in a particular month, you may want to have the second hard hit 2 months or 3 months apart. That I told you all about credit history and how to improve it and how to start creating that history. Let's see what are the range that you would want to maintain it. Anyway below 500 is definitely frowned upon. That is looked at as a very bad credit score. 580 to 669 is considered as fair. But even in that range, getting any loan approved or getting a rental application approved can become very difficult. 670 to 739 is considered as good. 740 to 799 is considered as very good. And that is basically the range that I would strongly advise everybody to keep their credit score in. Because once your credit score is in this particular range, not only does your application get approved, but if you want to bargain on a better interest rate and stuff like that, this range will definitely help you get that. 800 and above is considered as excellent. And now this is a range. So if you're a person who does not have any car loan debt or any personal line of credit or mortgage debt, this is the range that usually you will find your credit score in. With that said, I hope I have given you a good background on what credit score is and how to improve them. If there are any points that I missed and you would like to share, please add them in the comments below, and I'll definitely try to integrate it in this video. Thank you.